And if you're familiar with Airbnb as well as DoorDash, this week, two of the largest, most anticipated IPOs in the common sector, the tech sector, the retail sector are going to close out the year 2020 with all the disaster and catastrophe and monstrosity that we've been engulfed with this pandemic. This week, Airbnb and DoorDash are going public. So what does that mean for me and you? That means that it might be an opportunity for both you and me to buy some shares of Airbnb as well as DoorDash and start, having that service that we might have been spending money on, start paying for itself and lining our pockets with some of that change. A lot of you guys may not be really aware of what an IPO is, an initial public offering, or how it works. And basically what that means is if you hear about companies that's selling shares on the stock market, people investing, whenever there's an IPO, initial public offering simply means this. This is the day that the regular people, such as you and I, which are retail investors using Robinhood or Webull or some of these other broker apps that we have on our phones or devices, we're able, if we want to participate in the space of investment where we can actually purchase shares from a stock of either whatever that company is. This week, those two companies are Airbnb and DoorDash. Now, there's a couple things I want to go over here right now. And I'm going to highlight Airbnb. As you can see it right there above me, it says Airbnb boosts IPO price range between $56 and $60 a share. So if you read that, you might be saying, oh man, I'm going to get me a couple of those because they $56 and $60 a share. But let me show you something that was published on the 1st of December. See how quick things change, right? If you look at what's up there now, you'll see something that says updated Airbnb IPO filing sets price range with $35 billion valuation. And if you look closer at that, it starts talking about Airbnb plans to raise $2.5 billion with an initial public offering that will price shares in the range of $44 to $50 a piece. Now, that particular article came out December the 1st. So if you was up on it December the 1st, you was looking at it and you was saying, oh, $44 and $50 a piece, I might get me a couple of them or not, right? But in 3 days, on the course of 4 or 5 days, they've changed their valuation, and now they're basically saying that price is going to be $60 or $56 a share. And then here's the thing that's going to make it even more confusing to you. This is really going to confuse you. Those price ranges between $56 and $60 and that earlier price range, which they updated and changed their mind to this, that's not even the price range that you're going to see, that you and I are going to see pop up on our devices or our computers when the price actually hits live Tuesday or Wednesday within 48 to 72 hours. That's the thing that I'm saying to you guys. When it comes to these IPOs, there's a price range or reference price that's basically developed or that they come up with based on the valuation and trading that's taking place amongst sales of the stock from the company directly to the investors. Okay? So real quick, if you think about IPOs, what are the main purpose of IPO? Why are companies even having IPOs? Well, companies generally have an IPO to raise money. Let's bottom line that. First of all, IPOs are not a humanitarian effort no matter what the company is. And basically, an IPO is a company way of raising money because they feel like the value of their company is such that if they can get some investors, some financial institutions, typically banks, that's why you typically hear about the JP Morgans and the Goldman Sachs and the Bank of Americas and all of these other financial institutions and organizations backing or underwriting these companies that want to go public. And then you say, okay, so they want to go public. What does that mean, Todd? They want to file a form with the Securities Exchange Commission so that they can legally get listed on exchanges so that they can begin selling their security. Their security is a share, as we know it, that we purchase from a whole stock that they come up with. So take, for example, Airbnb boosts its IPO price range between $56 and $60. And then the very next line says, new price range for home rental company Public's debut equates to $39 billion to $42 billion fully diluted. Okay. And so we go a step further with that. Like what does that mean? How is that going to affect the pricing? Well, if you look at this, they're basically saying that they're going to sell so many million shares. Their stock is comprised of so many million shares. And based on how many millions of shares they have, so many of them will be sold to some of their employees. So many of them will be sold to the investors. And the majority of them will be made as a float, meaning made available to the you and I's on these exchanges where we can buy and trade and sell them. Going back to what I was saying earlier, though, the issue is, even though they set that price, even though they raised it and they set their price to $56 and $60 a share, that price is the one that they're trading and selling it now amongst the investors. That's who's doing that now. Come Tuesday or Wednesday or Thursday, whichever day this week, it actually goes live where you can dial into your Robinhood on your device. You can dial into your Webull or your E-Trade or your M1N, if I'm even saying that right, any of those broker apps that you use, or if you just follow it some kind of way. You will not see, and I will not see a price that opening day of $56 or $60. We will probably see the opening price somewhere at the range of about $120, $90, I'll be surprised, but probably $120, $150 on up. So if you're new to the IPO space, you're in for a big surprise if you think that because you see all of these articles and news reports that the share price, the IPO price range will be between $56 and $60. That's not what's going to happen, okay? That's the determined share price based on what they're selling to the investors and everybody behind the scene before we even get a look at it when it pops up on our phone. That's just what that is. So what does that mean for you and me? Can we still participate? Will people still buy it? We're retail investors. What does that mean? That means that none of us have a bunch of money. Some of us think we have money because we got $5 more than the next guy, which is fine. We can feed our egos and all of that we want. But retail investors are the you and I's. We have $10, we have $100, we have $1,000. Some of us are dollar heirs. Some of us are $20 heirs. Some of us are 100 heirs, however you want to classify yourself. When we get an opportunity to purchase shares, we'll be looking at that thing jump, the volatility. The word volatility simply means the sudden movement of the price range on a price chart for a particular stock. When Airbnb hits, Tuesday or Wednesday, whenever it actually hits, you're going to see that price going up and down, probably more up than down, but it's going to be sharp and it's going to be quick. So you're saying, man, I want some of that. I want some of that. Well, if you talk to some people that have invested and got into opening days of IPOs, more seasoned people, they'll generally tell you that you want to stay away from it the first couple days. And the reason why you want to stay away from it the first couple days is because what they call the volatility. Remember that agitated movement of price range? And what I call violence. To me, volatility is synonymous with violence. It's the violent movement of the price of a particular stock. There's going to be a lot of volatility, or what I call violence of price movement, when it comes to Airbnb, when it hits the exchanges for us to see Tuesday or Wednesday or Thursday this week, within 48 to 72 hours. Now, Does that mean you shouldn't jump in? Not really. It's really up to you. The bottom line, you do what you want. Nobody's your financial advisor, right? But what people are generally doing when they're trying to give you some guidance, when they're trying to say, you want to chill back and watch it, I concur. I agree. If you've never purchased shares of a stock during the IPO, when it hits the brokerage, when you see it, what I would do, I would watch it. I would look at it. Find some time and look at it. Okay? Like, let's say it's supposed to launch actually Wednesday, right? It's going to come on. It's going to come out like the sink, the faucet. They're going to turn it on. Who's going to turn it on? The New York Stock Exchange, the NASDAQ, the Dow, the S&P, wherever it pops up at. You can sit there and look at it. You don't have to buy into it to watch the activity. The reason why I say to you guys that if you have the opportunity to watch it, whether you're going to purchase some or not, and I say to you other guys that aren't investing, install a broker app on your iPhone, on your device. You don't have to transfer any money from your bank and have money in that account to see what's going on. Okay? You don't have to. I mean, you really don't. You can install Robinhood, you can install Webull, you can install E-Trade, you can install TD Ameritrade, you can install all of these brokerage apps, whichever one that a friend of yours or a family member might recommend or somebody who you trust. You can install it on your phone without transferring money over to your bank. They're not going to ask you for your credit card number or any of that just to install it. They might have you set up emails, different stuff like that because of KYC. KYC is an acronym for Know Your Customer. Not KFC, not Kentucky Fried Chicken. KYC is Know Your Customer, right? So they might have that. But beyond that, if I was you guys, I would invite you. Check out what happens during the IPO. It's exciting. To me, it's exciting, right? But if you saying to yourself, well, Todd, what if I wanted to buy it and I didn't want to spend $56 or $60? Well, you ain't got to worry about spending $56 or $60 because when it pop out, it's not going to be $56 or $60. I think it's going to range between $90 and $150 when we see it. And that price is just going to jump up and down, and it's going to jump more up than down. I wouldn't even be shocked if it don't list out at $180 when we first see it. But anyway, to your point, Talk, what if I want to buy some and I just don't have the money, but I do want to get some that day? You still can get some that day. You know why? Because most of these brokerage apps, if you have money in there, they will let you buy a slice of a share or a fractional share. So even though it pops out at $150 or even something goes wrong with the machine, $60 show, you can just buy $10 of it. You can buy $30 of it. You can buy $25 of it. You can sit there with $50 and just spend $10 on 5 different companies, shares if you want, whether it's IPO day or not. Those are called fractional shares. Those are called slices of shares. And what that does, they give you the portion of what you're buying, and that's what's represented as a decimal point or fraction in your account. So the increase or decrease of that stock, as you lose or you gain in the value of that stock, it will represent itself proportionately to how much you put in. And then you can always put some more in. You can put $10 every day or every week or whatever you want to do. I really believe that people should do that so that they can get their feet wet and they can get a sense of what's going on with price movement, navigation, and different things like that. But let's say, I'm going to use me for example. I'm going to buy some shares of this that day. That day, that Airbnb IPO is live so that I can get to it on my Webull, my brokerage app, on my E-Trade, I have an account on E-Trade, or on my Robinhood, I have an account on Robinhood. Here's something that you can do. Here's something that you can do. You can set what's called a limit order, okay? And let me explain to you what a limit order is, okay? A limit order will allow you to set a price that your execution, your purchase, doesn't take place unless it hits that price. Hear me out again, right? And I'll jump over here. I think we have a good example through through Robinhood. Here we go right here. Okay, here we go. All right. A limit order. What is a limit order? Okay, this is a good example. All right. Let me make sure you guys can see it. Give me a second here. All right. Let me move something right here real quick. And we can get to it like that. Okay. All right, so here we go. All right. So you say, what is a limit order? Okay. So what a limit order is, it allows you to set what's called a buy limit order. So I'm going to click on buy limit order. All right. Technically, because there's different types of limit orders. And in general, you know what limit means. Limit, it still means that in the investment world, it's some type of restriction, right? You're putting some type of filter on it. It's a limit. But what is a buy limit order? When it comes to purchasing shares or stock or whatever you want to call it, every brokerage app, excuse me, they have something called a buy limit order. And what a buy limit order allows you to do, no matter what the price may be, how high it is, if you want and you have money available, you can say, you know what? I want to purchase 1 share or 10 shares or 2 shares or 3 shares of that particular stock, only if the price comes down under $50. That's what you can do with a buy limit order. And you can go back to work, or you can go back to sleep, or you can finish praying, or you can finish robbing banks, whatever it is that you do, right? That you don't want to have to sit there and watch it and say, I would do it, Todd, but I don't want to have to sit there and watch it all day and wait till the price come down or go up. You don't have to sit there and watch it all day. I was suggesting that you guys do that so that you can get a sense of the activity. But in terms of, is there a situation in any brokerage app that you can set up, that you can configure a setting that you can do without permission that would allow you to say, you know what, I understand the volatility. I also understand that that price is coming out at a level that I can't afford, that I don't even want to purchase at. It don't even make sense. I've been advised by my homeboy, my pastor, my financial advisor that you don't want to buy in at that high price. But they kind of agree that if I can go in and say, you know what, I'll buy $100 worth, or I'll buy 2 shares if it comes down under a certain price. You can go into your brokerage app and set that up and go back to sleep. And all day long, and you have to choose whether you're choosing for it to just, you know, that setting to be there for the day. And what they mean by good for the day, they mean up until the stock market closes, or the closing of the bell. And the bell generally closes at 4 p.m. because it's based on Eastern time, standard Eastern time, New York Stock Exchange. So at the end of the trading day, when the bell closes, then what happens is that setting or that order you put in for the buy limit order, it cancels out. So that's the situation. So again, we all agree, we all know, or at least Talk is running his mouth about Airbnb. It's going to list beyond $55 and $60 when we see it. It's probably going to be $90, $120, $150, all the way up to $180. What I'm going to do, what Talk is going to do, Talk is going to set some buy limit orders. Even though I don't see it come out at $45 and $55 and $60, I'm going to set some buy limit orders for $60. I'm going to hope that the volatility is so crazy of bouncing up and down that sometime during that day or the days to come in the near future, it dips down under that $60. And then that's when it's going to execute my purchase. That's what I'm going to do. Matter of fact, I'm going to set a couple of them to purchase some shares of Airbnb. If it dips down under $60, to automatic purchase me some shares. And I'm going to set another buy limit order to automatically purchase some shares if it dips down under $45. Because then that's my way of saying, let me create my own scenario where there's a possibility that I'm going to be able to get it for the same price that they're giving it to these investors, that they're giving it to the other people that have the opportunity to get it at that price of $56 and $60 a share. That's the only thing that I can do, because other than that, I don't want to chase the higher price that it comes out at, when typically when the price consolidates, and you'll hear that term consolidation, right? Kind of what they mean by wait until the price consolidates. They mean you don't want to jump right into an IPO unless the price is so cheap for you that you feel like you can afford it, and it's the right thing to do. But the general principle is, especially if you're a retail investor, you want to wait until the price consolidates. And what they mean by waiting until the price consolidates, they typically mean wait until the price settles down and starts moving the way that it's typically going to move. All right? So think of an IPO as the first day, the initial public offering. That's the first day that Airbnb is going to be listed on the exchanges for the you and I's to purchase shares of. Think about that as your 5-year-old or your 6-year-old. And you just gave them some Captain Crunch, and it's 8 o'clock in the morning. And right after you gave them some Captain Crunch, you gave them some butterscotch crimplets from back in the day, the real butterscotch crimplets, right? And then right after that, you let them drink a Coke soda or a Mountain Dew. Your 5-year-old is probably running around the house, turning on all the devices, all the lights. He probably running around with one remote control in his back pocket, the car keys in his front pocket. You see what I'm saying about volatility, violence, volatility, violence? His movement is crazy. He not hurting nothing, but he's into everything at once. Ain't no telling what he doing. He upstairs, he downstairs, he out back, whatever. Consolidation. Consolidation is, don't beat his ass or decide to send him away or decide to give him counseling until he calm the hell down. Once he calmed down, then make a decision. That's consolidation. That's what they kind of mean. Wait till the price settles in. It might take a few days, might take less than a week. Then you'll see really what the price is about, and then decide whether to purchase and, make a more conscious, deliberate decision to go in and not chase the high price and not just hope for the low price. That's what they recommend. Okay, that's what they say. And especially with your child. Why? Because we don't want to do something that's going to have, what they say, you don't want to make a permanent decision on a temporary state of being. And that's all it is for the IPO. It's like a restaurant opening up. And you go there and you say, man, the parking lot filled up. Tell the boss we need a bigger parking lot. Well, nobody builds a parking lot to a restaurant or anything for opening day. You build it for the consistency. Once things normalize, consolidation. Once things settle down, how it's typically going to be, consolidation. I just keep throwing that in there so you guys can get a sense of that when you hear that term. These terms are tricky when you hear that term used about pricing in the stock market. So that's what I'm going to do. I'm going to use a buy limit order. I'm going to use a couple buy limit orders on some of my different brokers. I'm going to say, hey, buy me so many shares if that price dipped down under this, and buy me so many shares if that price dipped down under this number. It ain't got to be the same number. You can choose whatever price you want. You could say if it dipped down under $100 or $50 or $60 or $10. And you can choose whether you just want that order to be in for that day or you want that order to be in until you cancel it. Because you can cancel that order whenever you want. Now, it will hold the amount of money that it requires to execute that. So you can't put in that order. Let's say you had $100 and you say, you know what, buy me 1 share of Airbnb or 2 shares of Airbnb if the price comes down under $40. That's your buy limit order. Purchase me 2 shares if the price of Airbnb comes down under $40. So that's going to represent $80 of the total of $100 you have in your brokerage, your app, okay? Well, once you place that order, it holds that $80 until it execute or you cancel the order. So right after that, you won't be able to just buy $100 worth of another share or transfer that $100 back to your account without what? Without canceling that order first. So just kind of be clear on that. Now, again, guys, I'm just saying to the newbies out there, my message isn't really to people that's already into investing. My message is typically to new people out there, right? What you see on the screen right here is an article that came out December the 1st. December the 1st was 6 days ago, 5 days ago. Look at what it says. It says updated Airbnb IPO filing sets pricing range with $35 billion valuation. Just 5 days ago, Airbnb wasn't trying to charge $45 or $60 a share. They were saying that their valuation was for $44 to $50 a share. That's all they were saying that they was going to charge. They changed their mind within 4 days, and now Airbnb IPO price range is between $56 and $60 a share. I'm going to be honest with you. I will not be surprised, because it's not Tuesday yet, that they don't change it again, where this price range jumps up between $75 and $90. I wouldn't be surprised, because that's how they do. That doesn't mean that this is not an opportunity for you guys to potentially increase your financial wealth. This is an opportunity to me. I'm just trying to, for new people who might be curious enough, but they thinking, is it even going to cost me money to watch? Nah, man. Just install it on your phone or put it on your computer. And this week, just kind of pay attention to the pricing. When they say it's launch, you got 15 minutes and you home, bring it up on your brokerage app and look at you can watch the price movement. You don't have to wait till it come across the ticker screen at the bottom of the screen on the news. You can actually watch the price movement. You can see it. That's what I'm saying to you. Get kind of acclimated to it. Get used to seeing what the navigation looks like. That stuff don't cost you no money. And the reason why I'm saying this to you guys, especially if you already crazy about going to the casinos, I understand. I get it. Whatever your reasons are, right? You probably enjoy the shows. You probably enjoy the food. And you probably win every time you go to the casino. I'm not talking to y'all. But for those of y'all who just can't seem to stay away from the casino, but you would like to find another way of creating some leverage, or what I call creating your own luck, where they say preparation meets opportunity. There's some things that you can do in the stock market where you can research information. You can find out in a timely fashion different events, occurrences, some significant moves with different companies, what they call catalysts, that's going to move price points beyond this IPO thing. And I'm just saying, take a look at it. Take a look at it. This will move you far beyond that favorite chair at the casino. It'll move you far beyond, I don't sit in the chair unless it's stains in the carpet. I promise you, it'll take you away from that. So if you're thinking about investing, if you're curious about the process, this is a good week to look at some real highlights of something or two of the most anticipated companies to go public for the year 2020, and that's Airbnb and DoorDash. And you guys are familiar with DoorDash. They're that eating delivery company. Okay, they're not everywhere, but they're in enough place, and they're number one. Yeah, they're number one. They rank over Uber Eats, and they rank over Grubhub. DoorDash eating delivery service or food delivery service is number one. All right, guys, I'm going to let you guys go. Like I said, I just wanted to share with you. I wanted to invite you to take a more of a peep. Do more than peep. Take a look at the IPO process, okay? Also, again, if you want to buy some anyway, or if you wanted to understand, is there a possibility that I could have bought some at a lower price? I just want you to know that in any brokerage app you use, there's some version of something that represents a buy limit order, where you can set a lower price than what something is selling for, and then pick whether to close it for the day. In other words, it maintains that order for that day or until you cancel it. And if you don't, typically the brokerage app will say how many days it'll hold it for. Like in Robinhood, I think 90 days or whatever. And you can set that lower price, and through the volatility, the up, down, and swings of the price, if it dips under there, it'll execute that purchase for you, and then you kind of got it at the price that you want, even though you couldn't get it at that lower price that day. And you can do it with any of the stock. You can do it with Tesla. You can do it with Apple. You can do it with Facebook. You can do it with Twitter. You can do it with Snap. You can do it with Adobe. You can do it with Best Buy, Gap, Ultra. The list goes on. All right. Anyway, it's your boy Talk Williams, host and creator of what? The Examine Life podcast, man. Y'all have a good one, man. Let's get that money, man. Let's get that money. That's all I'm saying. We doing it anyway in some type of way. Let's get